Since COVID, the dollar's lost 25% of its value, and Bitcoin is up 14x. That's pretty good. It's been the best way to protect yourself against that inflation over the last 5-ish years. Also, if you go back then, people were ready to consign Bitcoin to the dustbin of history. It's dead. It's not providing that protection. Look, it was literally the best way to protect yourself from the inflation that followed. Why? Because it is one of the two real stores of value that exist in the world. And it happens to be the emerging digital version, which is gaining market share over time. It's going to get to $1 million. I pretty strongly believe that that is true.
Crypto has been stuck in months of volatility. Geopolitical tensions are shaking global markets. Regulators in the United States are still fighting over how digital assets should even be treated. And after repeated pullbacks, investors are on edge wondering if this rally above $72,000 can actually hold. So when Bitwise CIO Matt Hougan says Bitcoin is going to $1 million, the first reaction most people have is disbelief. But when you listen carefully to his reasoning, this isn't some wild moonboy prediction. Hougan isn't saying Bitcoin needs a miracle. He's saying the exact forces already shaping the world right now – inflation, debt expansion, institutional adoption, and the slow collapse of trust in fiat systems – are the same forces that have been pushing Bitcoin higher for the last 15 years. And if those trends simply continue, not accelerate, not explode, just continue, then $1 million Bitcoin starts to look less like fantasy and more like the base case. Stick with this, because the logic behind his argument gets even more convincing once he zooms out and shows how the math actually works. Before we go any further, hit the like button and subscribe to the channel if you want more breakdowns like this. We don't just react to headlines here. We look at the macro forces, the institutional moves, and the long-term trends that actually drive Bitcoin, crypto, and global markets. And right now, those forces are lining up in a way we haven't seen in years. Thanks, and let's dive right in.
So much carnage in the world. How the hell is Bitcoin going to go to $1 million? Okay, you sent this to my inbox. You sent this to all the subscribers to your memos right in the middle of this week. Bitcoin to $1 million. Pin it.
Sometimes you need to zoom out. The thing I would take issue with your introduction was the idea that this is a wild prediction. Actually, the point of my argument was that this is a pretty conservative view, right? Look, I did have this experience. I wrote about it in my memo. An advisor asked me, is this crazy, right? You say Bitcoin's going to $1 million. Is that crazy? It's 14x from where we are. Things don't 14x that often. And the point that I was making in this article is it's actually very conservative assumptions that get you to $1 million. So let me say what those assumptions are. Usually when people talk about Bitcoin going to $1 million, they look at the size of the gold market today. It's about $38 trillion. And they say Bitcoin would have to take half of that market to be worth $1 million. And that sounds crazy. Bitcoin being as valuable as gold in the next 5 or 10 years is a very optimistic view. There's some of us who think it might happen, but that's a very optimistic view. But that's the wrong way of thinking about it, because the gold market has been growing over time. I remember when the gold ETFs launched in 2004, the entire gold market was $2.5 trillion. And that $2.5 trillion has grown to $38 trillion. And the point I was making in this article is that if you assume the store of value market that's captured by gold and Bitcoin will continue to grow as it has for the last 20 years, then all that Bitcoin needs to do to become worth $1 million is take 17% of the market. 17% of the market is totally reasonable over the next 10 years. So again, all you need to do to get to $1 million is to assume the gold market will continue to grow and Bitcoin will continue to take market share at about the pace it's taking market share. In other words, what's happening needs to continue happening for the next 10 years, and you get to $1 million. Could it get to 2 million? Absolutely. Could it get to 500,000? Yeah, sure, if it disappoints. But the goal was that these are not outrageous numbers. These are actually normal numbers. And I thought amidst the carnage and confusion, people might want to remember that. Look, you can't expect Bitcoin to go up every time gold goes up, but go up 10x more. That's what people want out of the market. If that happened, people would only own Bitcoin. There would be no reason to own gold. Over the history, there have been periods where Bitcoin led significantly. We happen to be in one unique period where gold has been leading. but they're both providing the same service, which is the ability to store wealth outside of the fiat system without relying on a central bank or a government. The bet you're making is that more people will want to store wealth outside of fiat currencies as the world becomes more unstable, as trust in institutions fail, as people keep printing money. Some people want to do digitally in Bitcoin, some people in gold, but they're doing effectively the same thing. It's really short-termism that causes people to freak out, that over the last 6 months, gold outperformed Bitcoin. Over the last 2 weeks, Bitcoin's outperformed gold. Are we consigning gold to the dustbin of history? I don't think so. I think you need to zoom out. Look, since COVID, people always ask, is Bitcoin a good store of value? Since COVID, the dollar's lost 25% of its value, and Bitcoin is up 14x. That's pretty good. It's been the best way to protect yourself against that inflation over the last 5-ish years. I think asking for more than that is just asking too much.
What other big things need to happen?
Yeah, governments need to keep spending too much money, which seems like a pretty good bet, right? That's the biggie. People need to keep getting older, because the people who own Bitcoin are primarily young. As they get older, they earn more money, they're wealthier, they move into positions of power, they allocate on their behalf. The world needs to keep getting more digital. These are all pretty good bets. I don't think there's any like narrow catalyst. Would it be helpful if we passed the Clarity Act? Because that's broadly good for crypto, of course. But really, it's these big meta themes, right? Will the world get more digital? Will young people get older? Will governments print more debt? Those things seem pretty certain. If those three things happen, I think it's hard to find a world in which Bitcoin isn't much more valuable than it is today. Does it need to deal with quantum? Yes. Are there these other things it needs to deal with? Yes. But really, those are the three drivers that are sort of a massive tailwind. And I just don't see any of those three reversing.
Are the Bitcoin ETFs, and obviously you're at the center of this, is that a similar kind of long-term signal for Bitcoin?
100%. Yeah. I mean, here's the crazy thing about gold, which I can't get people to believe me, but this is true. In 2003, before there were ETFs, gold was for like crackpots. It was mostly gold bugs who gathered in cut rate casinos in Wall Street. I mean, in Las Vegas for conventions that were a little bit sad and served like really bad food you didn't want to eat. That was the gold. And it was the ETF that came along and made it easy to access and allowed institutions to allocate to it that began its journey from $2.5 trillion to $40 trillion, because it was so hard for an institution to allocate to gold, even if they wanted to. They had to buy physical bars and store them, or they bought gold mining stocks. It was a mess. The ETFs brought the rest of the world into the gold market, and there was dramatic expansion. It's not the only reason we went from 2.5 to $40 trillion, but it was a big piece. And you have that again in Bitcoin. Look, Bitcoin today is not that far from the size of the gold market in 2004, right? We have literally seen this before. It took 20 years for gold to 14x. Could Bitcoin 14x in 10 years? I think so. And then it just mathematically gets to $1 million. So I do think the ETFs are a big piece of the puzzle. It unlocks it for the rest of the world.
While pretty lofty, Hougan's $1 million Bitcoin prediction doesn't depend on some single catalyst or perfect bull market. It depends on long-term structural trends that are already in motion. Governments keep spending, debt keeps growing, currencies keep losing purchasing power, and investors keep looking for ways to store wealth outside the traditional financial system. That's the same environment that took gold from a niche asset to a $40 trillion market, and the same environment that allowed Bitcoin to grow from nothing into a $1 trillion network in just over a decade. And that's where the conversation starts to shift into something even bigger than price. Because if Bitcoin reaching $1 million depends on the world moving away from the old financial rails, then the real story isn't just about Bitcoin versus gold. It's about an entire financial system being rebuilt in real time. Tokenization, decentralized markets, and blockchain settlement aren't theoretical anymore. They're starting to show up exactly when the traditional system struggles the most, and that's the moment Hougan says could accelerate adoption faster than anyone expects. Before we proceed, comment below and tell me what you think. Is a $1 million Bitcoin realistic, or does that sound completely impossible from where we are today? I read the comments on every video, and it's interesting how divided the market still is right now, especially with everything happening in the world at the same time.
There's been this question in a lot of people's minds that we're building up this tokenized infrastructure where things trade 24/7, 365, and they're instantaneous settlement and they're low cost and leverage is easy. And it's just better than the TradFi system. Why isn't TradFi moving over to this in mass? I think that's been a question that crypto has been asking itself. And the reason is that in normal times, most investors don't need any of that. Most investors are happy to go home at 4 p.m. on a Friday and watch pizza and eat pizza and watch a movie. They don't necessarily want to be trading. The point of that piece was that's fine in normal markets, but sometimes there are these shock moments that force people into this new ecosystem. So what we saw is that when the US started bombing Iran, which I think was at 2:30 on a Sunday morning or something, every market around the world is closed. Stocks are closed in the US, Europe, and Asia. The futures markets are closed. Even most Forex markets are closed. It's like a black hole for TradFi. And so what people did is they shifted onto Hyperliquid, and that's where they were trading oil. So much so that Bloomberg, covering oil's price, quoted a Hyperliquid contract because it was the most liquid. And the thing that happens is, as a result, all these TradFi people were forced to experiment with this new rail. If they wanted to respond, they needed a wallet, they needed to be on Hyperliquid, they needed to trade. And once you taste that, you're not going to fully ever go back to the other side. I think every major global macro hedge fund now needs to be able to operate on the Hyperliquid market. I know I do a lot of financial history on this show, and you always indulge me, so I'll do one more piece.
Please, yeah.
If you look at ETF growth historically, it's sort of puttered along at a 30 or 40% CAGR for a while, which is pretty good, until 2008. And in 2008, what happened is traditional bond mutual funds stopped working during the global financial crisis because they had these NAVs, but they couldn't process redemptions because the bond market was broken. But ETFs continued to trade throughout. And so all the people who poo-pooed ETFs tried them for the first time because it was the only way to really access the bond market. And the CAGR went from like 20 or 30 to 80. It just dramatically upticked the growth of ETFs, and it never went back. Today, ETFs are $30 trillion. And I think events like this weekend are going to do the same thing for perp markets, for tokenized markets, for stablecoin use, et cetera. Once people taste it, they just do more and more of it. And I really think it is a weekend that we'll look back on as a really important break and accelerator of tokenized, crypto-based, blockchain-based finance.
Mm-hmm. Is this bullish Hyperliquid as well, right? Because you have
hugely bullish Hyperliquid. They have a window of having a lock on this market. You are going to see the other providers start to move towards, oh my goodness, we need to do 24/7 trading. They're going to have a hard time getting there because of the sclerotic nature of their underlying sort of infra, but they're going to try. But for a period, Hyperliquid's going to own this market. The sort of volume on weekends is going to increase. The number of users on Hype are going to increase. Makes me very bullish for Hyperliquid and other DeFi apps, but particularly Hyperliquid over the next year plus. It's really emerging as a giant. Back up, 5 years ago, and say that Bloomberg will be referencing an exchange that doesn't exist doing perp contracts as the global price of oil. It's like a crazy series of words, but it is eminently true. And that's where markets are going to go. I think it's really important. The other interesting thing, actually, for crypto is a few years ago, the market turned to Bitcoin specifically as the only liquid market that was available during these moments. And I actually think it's a positive for Bitcoin that now there are other real world assets like oil that you could trade more directly. I think that somewhat insulated Bitcoin and is one of the reasons the price has been relatively stable over these really high volatility weekends for the world, is because people can now express the views the way they want, which is actually what we want to trade is oil when the bombs are dropping in Iran. And I think that's an interesting sort of microstructure development that maybe I haven't seen talked about that much.
Has there ever been a time where it feels like the entire financial world is just so heavily compressed into daily headlines?
No, I mean the meta, the big forces are just so big right now, right? You have this Middle East crisis that could spike oil into the $100, $200 range. You have AI, which is progressively disrupting more and more and shocking the market with massive news. You have, big forces on crypto and tokenization. You actually have some big forces even in biotech and healthcare. The stories are just bigger than they used to be. So definitely on any given day, there could be a shock headline that introduces real risk into the market, and it doesn't feel familiar to me. I don't remember. Maybe the global financial crisis had much more instability, but that's sort of like waiting for the next shoe to drop feeling. That's probably the closest that I remember of not knowing what's around the corner.
The more the world moves toward digital settlement, 24/7 markets, and assets that live outside the control of central banks, the more valuable Bitcoin becomes as the base layer store of value for that new system. And this shift isn't just coming from crypto insiders anymore. It's coming from the biggest players in global finance. In a recent statement, MasterCard wrote, "Digital assets are entering a new phase, from cross-border remittances to B2B money transfers." Today, we introduced the MasterCard Crypto Partner Program, bringing together more than 85 crypto-native companies, payments providers, and financial institutions, creating a forum for meaningful dialogue as this space continues to mature. This is one of the largest payment networks in the world openly preparing for blockchain-based infrastructure. Hougan reacted to that announcement by tweeting, "It's pretty clear that essentially all of finance will move on blockchain-based rails in the coming years. The only real question left is how much value gets captured by tokens. That will be the battleground for the next cycle." BlackRock CEO Larry Fink puts it even more succinctly in a recent speech.
I would say the biggest question from central banks is, what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
If that's true, then Bitcoin hitting $1 million isn't mere speculation. It's what happens when the entire financial system slowly migrates onto a new foundation. This cycle is moving fast, the headlines are getting bigger, and the next phase of crypto could look very different from anything we've seen before. Let me know in the comments. Do you think Bitcoin really reaches 1 million this cycle, or is the market still underestimating how big this shift could become? If you enjoyed this breakdown, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss the next update. Thanks for watching and see you in the next one.